Jeff, wonderful to see you today. Thanks very much for coming in. By way of introduction, this is Jeff Wynne, a partner at Sullivan & Worcester and a regular contributor to TFR. And I thought it'd be good to get your view on the appetite for receivables finance, given that all these banks are retreating somewhat. They don't like the cost of the doing trade finance so much now. They're having to hold more capital. What's this doing in terms of finding alternative, more balance sheet friendly sources of trade finance?
There's quite a lot of possibilities, but they all start with receivables generated within trade.
Right.
It's the lifeblood of trade. Sellers create them by selling or providing services, and buyers have to pay. If you start with that, then you have to work out how you can finance it. And both parties need finance.
So if you're a small little business, provided that your buyer has got a good credit rating and is well known, the banks are going to like that. So we're financing the supply chain, we're financing the transaction path rather than the actual supplier. Is that where the risk is?
Absolutely right. The risk starts off with the seller, because he has to perform whatever he said he would do in order to create the receivable.
Okay.
Once he's done that, it's the buyer's credit risk that you're dealing with.
So is this form of financing growing much more than it was before? It's becoming more well known through conferences, through events, through training courses and things like that. What's your experience of the appetite for all of this and the work that's coming your way out of it?
The appetite is growing because the focus has been on how to structure transactions using the benefit of the receivable in order to provide a transaction for a financer and some greater credit for the buyer and some increased liquidity for the seller.
Okay.
Everyone can win on a correctly structured deal.
Excellent. The cost of doing this, is this kept down through standardisation, through good IT platforms, or what? How do banks and indeed procurement departments do this profitably?
Good question. You could start with supply chain and electronic platforms if that's the way you want to do it.
Yeah.
Equally, you can create some standard form ways of dealing with financing. You can use forfeiting techniques, factoring techniques, or you tailor-make your documents.
But if you tailor-make your documents, that costs more, doesn't it? So again, risk participation documents and those sorts of things, do they sort of help keep those costs down?
There's not a one-size-fits-all, as you would expect.
Indeed.
Yes, you can standardise your starting point, but what you're selling, if you're a financer, is your skill at how to make the transaction work.
Of course. Thanks very much, Jeff. It's been great to talk to you.